It's Tuesday, 17th of February, 2026. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every market trading day.
And we are jumping straight into the deep end of the Indian economy today because the inflation numbers are in.
And they're flashing a very specific shade of cautionary yellow.
It feels like that, doesn't it?
It really does. It's like you're driving with the handbrake slightly on. There's growth, sure, but there's this persistent drag.
And looking at the data that dropped this morning, that drag is getting heavier.
The wholesale price index, the WPI, has hit a 10-month high. It's clocking in at 1.81% for January.
Now, to be fair, 1.81% doesn't sound like a crisis.
No, if you're not following this closely, it sounds almost pleasantly low, doesn't it?
In isolation, sure.
Yeah.
But in economics, it's never about the absolute number. It's about the direction of the arrow.
And that arrow is pointing sharply up. That's what has the central bank sweating.
Right. We were in this comfortable zone, with prices cooling, and suddenly the heat is turning back on.
And what's worrying is that this isn't just one rogue sector acting up. It's not just, onions are expensive this week.
No, this is synchronized. And that's the real headache. We're seeing it across the board. Food, non-food articles, and the really critical one.
Manufactured items.
Exactly. When manufacturing inflation creeps up, it tells you something structural is changing.
It suggests companies are getting back their pricing power.
Precisely. They feel confident enough to pass on higher costs. It means inflation is becoming sticky.
So for anyone who is betting on an interest rate cut anytime soon.
Well, this certainly complicates that narrative.
It does. But let's look at the other side of the ledger. Our trade with the world. The data suggests we are buying a lot more than we are selling.
A lot more is putting it mildly. The trade deficit has widened. A lot.
And imports surged by a massive 19% year-on-year. Is that oil prices again?
Surprisingly, no. It's the shiny stuff, our national obsession.
Gold and silver.
Gold and silver imports are driving that bill through the roof. It feels like a defensive move. When people get uncertain, they buy gold.
But the real problem isn't what we're buying, it's what we aren't selling.
You're right. While imports flew up 19%, exports were practically flat, just a tiny rise of 0.6%.
Which is basically zero growth. And it looks like a geopolitical wall. We're seeing shipments to the U.S. getting pulled down by trade barriers.
We are finally seeing the tangible bite of protectionism. Tariffs are real, they are high, and they are hurting Indian exporters.
And to just layer on one more piece of gloom before we get to the markets, unemployment nudged up to 5% in January.
And the detail there is painful. The rise is sharper among women than men. It's a reminder of that K-shaped recovery we always talk about.
So, okay, let's recap the macro picture. We've got rising inflation, a widening trade deficit, and a softening labor market.
A textbook recipe for a stock market slide.
But that's not what's happening. The market isn't tanking. It's at war with itself.
It is a battlefield out there. The benchmark indices look muted, but under the surface, there is a violent rotation happening, a tug of war.
Between information technology and banking.
Let's call it what it is, the AI panic. The IT sector is bleeding out today.
And this all traces back to a release from Anthropic halfway across the world.
Claude 4.6, that's the name that's spooking everyone.
But we've had powerful AI for years now. Why is Claude 4.6 causing a sell-off today? What's so terrifying about this one?
It's the level of autonomy. That's the key word. The claim is this model doesn't just help a human write code. It can manage complex coding projects by itself.
So that hits the absolute bread and butter of the Indian outsourcing model.
Exactly. The market is asking, if an AI can write and fix the code, who needs the service provider? It's the Kodak moment fear.
Are they selling film in a digital world?
That's the anxiety. Investors are dumping IT stocks because they want earnings safety now, not the promise of a long-term pivot later.
It feels like a huge overreaction, though. I mean, these companies are incredibly resilient.
That's the counterview, and honestly, it's the one I lean towards. A lot of analysts are screaming buy right now.
They're arguing that companies like TCS are already pivoting, right?
Yeah.
Like their partnership with AMD for data centers.
They're trying to move up the value chain to become the integrators of AI. The argument is someone still has to manage the AI.
So the business model moves from we write the code to we manage the AI that writes the code.
Yes. But fear is a much faster driver than logic. So money is fleeing tech.
And it has to go somewhere. So it's
Yeah.
parking itself in banking.
Which is why banking stocks are hitting new highs. They're the counterweight, saving the benchmark indices from a total washout.
It's a classic defensive rotation. You have high interest rates, which means better net interest margins for banks.
That's the math. Investors look at the uncertainty of tech and say, no thanks. Then they look at the certainty of banking profits and say, I'll take that.
Speaking of safe havens, I have to circle back to gold. We're importing huge amounts, yet the trading price is sliding today. Gold is down nearly 0.5% and silver's down about 1.8%. That feels contradictory.
It does seem odd, but this is the classic buy the rumor, sell the news dynamic. We just had a massive rally.
So this is just profit booking.
Pure and simple. Wealth managers are telling clients to take some chips off the table, cashing in on the recent spike to lock in gains.
All right, let's zoom into the boardroom level. There's some serious shuffling happening in the power sector. This deal between Torrent Power and L&T.
It's a significant consolidation play. Torrent is acquiring 100% of Nava Power from L&T.
So is L&T just giving up on power generation?
Not giving up, just being disciplined. Operating power plants isn't their core DNA. They're an engineering giant. They build things.
So they build the plant, but they don't want to run it for 30 years.
And for Torrent, this is about bulking up. In the utility business, scale is everything. It's a win-win. L&T gets cash to build, Torrent gets assets to operate.
And moving from power to pints. Carlsberg looks like it's getting ready to tap the Indian public markets.
This has been brewing for a while. They're exploring an IPO for the India business now that they have full ownership.
They want that famous India premium on their valuation.
Exactly. They know they can get a better price for their shares in Mumbai than in Copenhagen. They're looking at the demographics and seeing huge potential.
And while global brands look in, Indian brands are looking out. Reliance Consumer is heading to Africa.
Specifically Nigeria, through a joint venture. It's a fascinating strategic bet on the global south.
It makes sense.
Mm-hmm.
If you look at Nigeria's demographics, it looks a lot like India did maybe 20 years ago.
That's the entire thesis. They're exporting their playbook, scale, distribution, competitive pricing. It's a long-term play, but the upside is massive.
Now, you mentioned the AI panic earlier. It seems like that sentiment actually hurt an IPO debut today. Fractal Analytics.
Yeah, it was a rough welcome. You'd think an AI and analytics company would be the hottest thing right now.
But it closed down 6% on day one. So the hype didn't help.
The hype actually hurt them. The gray market premium collapsed before the listing because investors got skeptical of the valuation.
They looked under the hood and decided the price was just too high.
Exactly. It's a sign of maturity in the IPO market. You can't just put AI in your prospectus and expect the stock to double anymore. You need the profits to back it up.
Let's widen the lens to geopolitics. Mumbai is hosting French President Emmanuel Macron.
And this is not a social call. He's meeting with PM Modi, and the agenda is incredibly specific. Defense and critical minerals.
Defense, okay, that's the National Air Engine mission. We need jet engines.
Right. But the critical minerals part is the real sleeper story here. Both France and India want to reduce their reliance on China for the minerals needed for EVs and tech.
This is the China Plus One strategy in action.
It is. It's a supply chain security meeting. They're trying to build a corridor for lithium and cobalt that doesn't pass through Beijing.
And moving to our immediate neighborhood, a major changing of the guard in Bangladesh.
A historic shift. Tariq Rahman, the BNP chairman, is taking the oath as prime minister. This marks a new political era in Dhaka.
Which, for India, is a delicate moment.
It means recalibrating relationships. It's going to be a real test of our diplomatic agility.
And finally, on the global stage, U.S.-Iran tensions are back, but with a very weird twist.
Nuclear talks are resuming in Geneva, which is tense enough, but you have former U.S. President Trump saying he is indirectly involved.
What does that even mean? He's a private citizen.
It means he's signaling influence, warning of consequences. It's like he's acting as a shadow negotiator, which undermines the current administration.
And Iran is just flexing its muscles with naval exercises. What a volatile mix.
It really is.
But before we get too anxious about that, let's switch gears to our science closer. This one is genuinely hopeful.
This is one of those breakthroughs that just makes you stop. Researchers have successfully built a realistic human mini spinal cord in a lab.
We've heard of lab-grown organs, but the spinal cord, that's the body's information superhighway.
And they didn't just grow it to look at it. They used it to simulate a traumatic injury. They replicated the inflammation and, most importantly, the scar formation.
Why is that scar so important?
In the nervous system, that scar tissue, the glial scar, is the enemy. It forms a physical barrier that stops nerves from reconnecting. It's the main reason paralysis is permanent.
So the body's attempt to heal itself actually prevents the repair.
Correct. And by replicating that scarring in a lab model, they can test drugs and therapies to dissolve that scar without risking human patients.
So this is a potential roadmap to treating paralysis.
It bridges the gap between animal studies and human trials. It's a massive leap forward.
From the complexities of global trade to the intricate scarring of the human nervous system. What a day.
It really highlights that whether it's economic resilience or biological healing, the drive to fix things is constant.
And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most. The content shared here is for informational and educational purposes only and should not be treated as investment or trading advice. We are not licensed financial advisors. Please do your own analysis or take independent professional financial advice before making any investments based on your own personal circumstances. Past performance is not indicative of future returns.